We got an explosive session today. We're going to be covering it all: Bitcoin, crypto, traditional markets, stock market, and we're going to tie it all together. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. We're going to start off here with TradeFi. We're going to start off with the DXY, and then we're going to build this into crypto. We'll start with crypto news. Then we'll also be looking at what's going on across the markets, how best to position. And then we got some extraordinarily exciting news over here, Hypernova. As you might have seen in the dashboard, the release of CTMX. We'll cover that and we'll cover it all. Hope you're all well as we get going here today. So we're looking at DXY, and the reason we're starting with the DXY is we build into liquidity, and then we'll talk about Bitcoin and the NASDAQ's relative performance to each of those. And you can see since last Friday, we were looking at last Friday saying, you know what, this looks like the right time to go ahead and exit this trade since the breakout of this triangle here, the yellow line. We saw a breakout, retest, came in for a second retest over here. And since then, we have been riding up. And this was a premature exit. It was before we saw a trend line break. And the reason we did that was because of price action in relation to the jobs data. Since then, you've seen price extend down further, price coming down a little bit further, and then bouncing up into that trend line again. And now it seems to be coiling a lot sideways. And you know what? A little bit neutral here. If we see this continue to break down over here, I'm looking for. Can't find it. Hold on one second. We can't start until we're ready to go. Entering ghost mode, bringing it up. Oh, we got a conflict today. Let me try and get rid of this thing and then see if we get it back up. Oh, can't do two at once. Anyway, so here we go. So I see that we're coiling, and I have this area up here. And if we break above this resistance, you could see this is where it was resistance. Once again here at the beginning of October, resistance. If we clear above that resistance, then the dollar potentially could go even higher. We'll track it as it comes. But right now, it looks like a good place to be neutral over here. We're seeing signs of a potential easing of the dollar strength here, but really we're just coiling. This could go either way. For a further breakdown at this point, I have this trend line over here. I'm going to rise that up a tiny bit to where that was resistance in the last test. If we break down below here, that should give us a little bit of easing. So one of the things here, because don't forget, we're in the middle of a tightening cycle right now. We're in the middle of a tightening cycle. Aldo, we'll talk about all that in just as we get towards that section. Jim, it is Taco Tuesday, and as I was preparing here for this session, and it's going to be, I hope you're comfortable. It's going to be a long one, and it's going to be a good one. And you never know where those really, those deep nuggets are going to appear. And that's what it takes to uncover them, putting all the work in. I'm excited for it. I hope you are too. Let's get into it. We are in a tightening cycle, and quantitative tightening is running. Obviously, rates, sharpest rate hiking cycle in history. Credit is tight, right? You remember me mentioning how tight credit has been over and over again. This is kind of interesting over here. You can see bank credit is contracting for only the second time in history. You could go back to the global financial crisis in 2008. And here we are again. We're seeing the contraction in banking credit. And that, in effect, is doing the tightening for the Fed, as we talked about, you know what, after the August meeting. Likely the September meeting, they'll pause and will remain data dependent. They did indeed pause for September. We're looking at them ready to pause for November. Now, there is one thing that can change that, and I doubt it will happen. But we got a whole host of Fed speakers this week, and it ends with Powell speaking on Thursday. Jerome, if he wants to hike and the market is not positioned for it, he's the last person that could go ahead and reset market expectations. But it looks like November, they continue that pause. And after this morning's retail numbers, which seemingly looked like the retail The consumer is strong in the US. We want to continue to see that. Not really sure if that's the case though. How accurate was that retail sales print? Ask the seasonal adjustment. Unadjusted retail sales plunged 5.4% month over month in September versus a 0.7 increase in adjusted. It remains to be seen, but again, we're talking about like through the end of the year, likely those cracks which are starting to form are not yet going to start really opening up. Seasonally, it's a strong period of year. We're getting ready for the holidays. People are spending beyond their means. We'll continue likely to see the consumer stay into it for now. We'll get into housing in just a moment. I want to build back over here and talk about what's going on as we're in this tightening cycle. And although the rate hiking cycle may be done, it may be done, and we're seeing some signaling from Fed speakers right now saying that it likely is done, and that truly is likely the case. Again, Powell could come in and change that. Powell could let us know different. If not, likely not only is the rate hiking cycle done, but quantitative tightening continues to run, and likely that will continue to run until something breaks. And what that looks like, we don't know. If you go back to last cycle, something breaking was only reverse repo market overnight rate spiking up. They had to return to balance sheet expansion. Equity markets, here's their NASDAQ, literally melted up. Melt up on that. Always watch the balance sheet. When the balance sheet starts going up, that's going to be a time, and not a one-off like March. Remember what happened in March? We had that here. We'll take your collateral, we'll take your treasury bills, and we'll give you par. We'll give you like what they're worth, but only for 12 months. And we said right after that happened, well, watch the balance sheet's going to go down. This is the running quantitative tightening. Not only did it continue to go down, it continues to make new tightening cycle lows. Now, if you look here at equity markets have held up extraordinarily well over these last few months as liquidity continues to go out. Bitcoin also, let's take a look at Bitcoin in relation to global liquidity. And you can see it's also held up pretty well. Not as well as equity markets. You can see the NASDAQ over here, and then thus far that has held up really well. And Bitcoin, you can make the case that it's holding up well as global liquidity goes out, but not as well. And we know that is because of we're in a tightening cycle, and you're going to see funds flow into assets depending on where they are on the risk curve. And stocks are a lot less risky than Bitcoin. Now, I get it, and I know, and I'm a Bitcoiner, and I believe in Bitcoin, but at this particular point in time, it is what it is. Now, we're not talking about what we hope is accomplished in the years ahead. Hopefully we get there. We're not there right now. What's something that could change? What's something that could cause global liquidity to rise? We see China right now, another injection, a little injection, right? It says 289 billion yuan. It's about 40 billion US dollars. It's a small injection, but it's a trend. And China, since 2022, this is their reverse repo. They continue to inject the largest amount of money. They're not coming in with any type of big stimulus measures. Next month, they're talking about, there's chatter about that China may put or place $137 billion, $1 trillion yuan package. And that's moving the right way. Something that could really cause global liquidity here to spin the other way, though, would be the dollar coming off. If the dollar were to put in some technical breakdowns and give some type of release here, a release valve here for the liquidity, you would see global liquidity begin to rise. And you can make the case that the NASDAQ here, don't forget, we're talking about seasonalities coming into the end of the year. It's usually very favorable into the end of the year. It's usually very favorable. And, if the dollar comes off, we might see some of that. Bitcoin over here, which again, relatively well has been holding in there, it could also continue to take off. So those are things that I'm watching, continue to watch, and we'll navigate together as they happen in real time. We did see that the US has said that, listen, we're restricting sales of chips to China. NVIDIA is saying this is really not going to affect their bottom line too much. I don't know. Well, by the way, before we check out, well, let's do it first. Let's just move over and just check out our positioning on NVIDIA. On the 1 hour time frame, you could see right before the news. Look at that. Do you think that these things get priced in ahead of time? I'm not so sure, but we get out of the trade. There's no question about that ahead of time, looking on with a nice little 3.5% profit. On the daily time frame as well, small loss, right? Small loss taken over here. And you could see back to back. So usually what it is small loss, small loss, small loss, big gain, small loss, big gain. And that is really what a successful system is all about. It's pushing your winners and letting go of your losers. So in regards to what we're seeing taking place with NVIDIA and in the news, obviously we're positioned well on that. But look at this. I'm just gonna. This is a clip over here. It's not important what's happening. It's Putin, and he's arriving to speak with. This is coming out of Kremlin.ru, and he's arriving in China to speak with Xi. Now I wonder, as we're seeing these war broke out last weekend, and we continue to see massive positioning take place, whether or not it is the U.S. sending multiple fleets to the region, or if it is Iran and Saudi Arabia talking, having direct relations for the first time since I could remember. We're seeing lots of pieces move on the grand chessboard. And one of these pieces here in this particular time is you are seeing the show of, let's say, strong alliance between China and Russia. They look very relaxed. They look very comfortable with each other. And I'm wondering, I hope this is not the case, but we like there's war taking place. US just said, hey, listen, you can't sell your chips to China. That's financial warfare taking place. Do you think, as the US is seemingly spread a little thin over here, that it might be time? Does China think now is the time that they might want to go ahead and put a move on Taiwan? I hope not. I don't think it is, but you have to watch what's taking place. This is something that's taking place here today. It's worthy of us talking about. Let's take a look at the NASDAQ, and then from there, now that we got the traditional markets out of the way, we can go ahead and we could take a look at Bitcoin and crypto. I got caught up over there in Hypernova's messaging over here. So let me revert back to it, and then we'll pick it up over here. So we're looking at the NASDAQ, and we're looking at a couple of things over here. I'm gonna go ahead and just move this down over here, right? I could see ever since this breakdown, we had the breakdown of that resistance over here. And then we were able to yesterday get back above it. But look what's happened. And I should have moved this down like this, right? And you could see that right now price continues to track that line and this upper line. And I don't think we see any type of resumption in equities until this upper line is broken, because look what's happening over here. And you could see this is where we're forming resistance. It's clearly the market showing the structure over here. The last bit of resistance is up over here. We're only a stone throws away from it. And if we're able to break out over here at that point in time, we could see what would be a seasonal run for equities beginning to transform and take place. But right now, we're just consolidating in the zone. This is the zone that we're consolidating in. And it's a little similar to what's taking place on Bitcoin, only on a different time frame. We'll take a look at it. I just want to briefly talk about what's happening here with 10-year yields. On that same Friday, we said, you know what? I'm taking profit. This was a 28% banger on the 10-year. It's a huge, huge move. We took profit on last Friday's jobs numbers as well, and the price action that ensued. It was an aggressive exit, one before the trend line break, but in retrospect, it was a good one, saving about 5 or more percent on that exit. Now we can see that price thus far has come back up, right? Remember, I said not selling short, we're just taking profit off the long. At this point in time, as we're coming in for a retest on yields, and a lot of people here, people are always like chasing price, whether it's through their analysis or what they're talking about or commenting about. Very few are able to be ahead. Very few even put out that type of analysis. And right now, here this morning, everyone's talking about yields are going higher, yields are high. Fed is like, you know what? We're done, actually. Market and market participants like, we don't believe you. We'll see what happens. But for me, this now sets up an opportunity to actually look for a short. Now, yields may continue to go higher. I have no idea. Out of the market, I think that's the right place to be. But at this point in time, where I said I wouldn't look for a short, now I will look for a short. Now, I don't know how to line it up. So it might not be waiting to see if we get a break of this green line over here. And there's no rush. The trade's got to be there to take it. Trade's not here today. There's nothing happening whatsoever. But I am making the observation at this point in time. Now I will be looking for actually a short. Now, if we break up and we start printing new highs, it's going to be a while before that develops. But here we go. We got 21 Fed speeches this week before the blackout. Blackout is before the next FOMC meeting, which is November the 1st. And I don't know what they're trying to do here or communicate, but the big dog, Powell, he speaks on Thursday. That's something we watch for. Thursday is right after the unemployment numbers. So we have unemployment claims in the morning, and then Powell speaking that afternoon. That is the biggest event that's taking place on the calendar this week. I don't know. It depends. Like if the question over here is, could I see the 10-year maybe even going higher? I mean, we have Jamie Dimon telling us that he expects Fed funds to go, potentially. He said it could go as high as 7%. He's not calling for 7%. He's saying it may. And because we live in a centralized planning system, central banking system, if the central planners come out and say, and what they've been saying is they're done. That's the messaging that we got thus far, is that we're done. And that's been coming at like repeatedly. If they change that and they're like, higher for long, and that's what we talked about in August. My expectations are in August at pause, and they're just going to be pushing higher for longer. I expect they continue to do that until they have to cut sooner. And that is my expectations. Right now, the market is pricing in the first rate cut into July. I think that gets priced in sooner. June, May, we'll see what happens. But that's my own speculation. It could go I'm data dependent, and I'm seeing cracks and signs, and you can see we talked about the credit markets doing the job right now. There's other things that I forgot to bring up, and let's talk about it really quick before I continue to answer that question. Hold it on tight about the 10-year and how far it could go. But we're seeing the slowest housing market in 15 years. Mortgages are the highest they've been since 2020, and housing sales are the lowest since 2008, right? Highest mortgage rates in 23 years are dragging down home sales to the lowest levels since the subprime crisis credit, per the Wall Street Journal. We're also seeing the number of homeowners hit with foreclosure notices in the third quarter of the year jump 34% from a year ago to 125,000. We haven't hit the recession yet. Oh, do you think we're going to have a soft landing? Remember, 2022 spring, the Fed begins the hiking cycle. No. Let's go back. October 16th, 2021, we post rate shock coming in 2022. Rate shock in quotes. Bitcoin is not immune. Not a single macro analyst was calling for it or believed it. In March, that rate cycle hiking began, and it's been the quickest and sharpest. It's been a shock. There's no question about it. And at that point in time, a lot of those analysts, all the people on the podcast were talking about something's going to break. Like, no, 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 no. There's so much liquidity out there. Nothing's going to break. We're far from it. This year, starting in March, we're like, okay, now we could begin trying to track. It looks like we're headed towards a hard landing. When that might happen, it looks to me that cracks are starting to form now as we get into the end of the year. Could that be wrong? Could somehow Powell and company engineer a soft landing? Or do they have to go ahead and, before anything breaks, turn back on the printers? Well, it's what we wait and we watch for. And that's what we navigate together. Jumping back over here to the 10-year. Do I think that we could go as high as we hit over here, 5.3%? I mean, if we hear that we're going to see some type of that they continue, that they're going higher, if that's what they communicate, then possibly. Don't forget, the U.S. Treasury continues just a massive new issuances, raising money by selling treasuries for their cash account. And we still got 2.5 more months left at the end of the year. They have roughly about another 800 billion. That's off the top of my head, coming from 1.85 trillion the last 2 quarters. That continues to put pressure. I wouldn't be surprised, but if we continued now to come higher, I am looking for a place to go ahead and to buy bonds, right? Looking for, when I say sell, I meant for yields to go down. But to buy bonds. So be watching that and see how that develops. All right. Hypernova, Bitcoin buy side, CTMX, Unreal. Let's get into it. I want to talk a little bit back before we get into it. Hypernova. Let's talk about what's going on here in Bitcoin and crypto. And we see that, are we allowed to say Bitcoin and crypto now? Right? For a while, the people, the maxi police are like, no, it's Bitcoin, not crypto. And I'm like, no, Bitcoin is the first cryptocurrency. Oh, but no, you have to do, no, it's permissionless. I can do whatever I want. Now Larry Fink is like, listen, I'm saying crypto and you all get mad at me. The Maxi's like, oh, could you believe this guy talking about crypto? He's like, listen, I have a spot Bitcoin ETF application in review. I can't be on the news networks talking about Bitcoin. I have to say crypto. Like, just calm down. It's crazy. Anyway, we're seeing a big breakout occur out of the descending triangle off of the news of a fake iShares BlackRock ETF approval. Cointelegraph put out a massive liquidation tweet for a lot of people over here. Bitcoin's still holding since this move and holding well. So you could see that what we're looking at, and this is kind of neat just for those that are new here. You could see this is looking at chart using price on a closing basis. And you could see that this is the bottom channel support. When I come to intraday price, isn't that just crazy that same trend line, right? That structure of the market is just as, it's amazing. And this continues all the way up wherever I want to put it. So I just put it right over here. And no matter, it's just the structure of the market. It's why I was looking at what I was looking on the NASDAQ earlier. And you could see the most outer edge right now is over here. And we've just broken above it. So that's a bullish technical breakout. And at the same time, right, we're going to need to clear a little bit higher. We'll look at where that level exactly is right over here. But we'll look at that in just a moment. So we're not out of the woods yet. And this does look like a bear flag to me. So I know you don't might want to talk about it, but that looks like a potential bear flag to me. We could get rid of this line now, and we could actually do this. We could just draw that like this and just watch and see whether or not that holds or not. This is actually a better line, right? We've been holding it. But anyway, let's take a look at what's going on. Oh, we have to do this together. I think that might need to look at, this is hash rate, and hash rate continues to shoot the moon. And we're coming up towards the miner's reward, the halving of the miner's reward every 210,000 blocks, the Bitcoin halving. If you look around what happened during the last halving over here, you saw hash rate come off. A lot of miners, after the amount of Bitcoin rewarded for confirming the network, discovering a block, it makes them no longer able to compete, and they have to go offline, right? And likely now more efficient miners at that time are able to jump in and take over their hash rate. And then we continue to see hash rate climb. But I wonder, right? This is like hash rate coming off about 18%, and every time hash rate comes off roughly that percentage, again, we have to look into it, but you can see it coming off again, buying opportunity, buying opportunity, buying opportunity. Look over here. Before the China miner ban, over here coming off, that was a buying opportunity, right? Even though hash came off massively more, when it came off the 15%, that was a buying opportunity. Over here, buying opportunity. Over here, buying opportunity. So I wonder if that's something that is worth us devoting any time to for looking for long-term accumulation, whether or not that is something that we should focus in onto. We've seen the ETF effect. It's a wedge. Spot ETF related news have spurred some of Bitcoin's largest recent spikes. We're looking at the year 2023 as being an historical low volatile year for Bitcoin and crypto. Again, we're in a tightening cycle, and funds flow into assets depending on where they are on the risk curve, and crypto and altcoins, they're like towards the bottom, right? Now Bitcoin, it continues to gain notoriety and fame. I mean, look at this. We're seeing Larry Fink all over the news networks, CNBC, Bloomberg, talking about no. Bitcoin's a flight to quality, right? What we're seeing right now. He also talked about, though, at the same time, let's call it as it is. He says in this that, we're seeing right now a flight into quality, Bitcoin and bonds. I'm not sure if he's watching the bond market. We're not seeing any type of movement into bonds, but either which way, we are seeing, though, those pieces move around the geopolitical chessboard. And I would not be surprised if things escalated. I hope to God they don't. And if they do, at that point, that might bring a flight into bonds. We'll watch out for it. He's saying that, and he's pushing it hard. Here's on Fox Business. He's doing the rounds. Watch what they do. And here he's saying, we're hearing from clients around the world about the need for Bitcoin. They have $10 trillion under management. You have to wonder, does BlackRock need Bitcoin? And you could see their performance not doing really so well here. Assets management, custodial banks, financials relative to the S&P 500. It's not looking good. Yeah, I think that they're aware of what's going on, and they understand that in this decade to come, we're seeing a massive change. We went from globalization, huge deflationary. It was a 40-year massive bull market for bonds, and now we're seeing that change, and it's not straight up or straight down. But my expectations throughout the rest of the decade, as we're seeing continued monetary reset happening, that we're going to continue to see higher yields. Now, I also am aware that the US has an enormous amount of debt to roll over in the next 12 months, in the next 18 months. And I would not be surprised if we see at any point in time a short window to roll over that debt as things, what happens if they need to restart quantitative easing? They're not doing that right now. Right now, they're tightening. We talked about that. But if they need to restart quantitative easing, they could only do it. It's only effective to do as you bring rates down as close to zero as possible. There will be a window. It's my opinion. It is a conspiracy theory, but there are people conspiring. Like central planning is conspiring, right, to run the markets. So we'll see what happens, right? But we are seeing and we saw yesterday when we saw what was the hint of an approval or the fake tweet of a spot ETF being approved. We saw the market's reaction, and it was the beginning of a massive candle, a 10% move like this in 20 minutes. And I do think if that was actually true, and an ETF had been approved, that not only would those gains have held, that they would have continued on that day, and that would have been just the beginning. But we don't know what happens next. Again, the SEC wasn't really playing nice. Don't forget, they let the clock run out on the appeal. They didn't say ahead of time, we have no intention of appealing this. We're ready to sit down with Grayscale and begin working out what's needed for the application. Instead, they kept quiet into the last hour. So whether or not or what happens next, it does seem like we are moving in the direction of a spot ETF coming, but we are not there yet. And market continues to coil in this area. So you can see over here this trend line, right? And this is also the structure of the market, which is why we have this touch over here and then over here. And we continue since March to be in this very tight range. A breakout above, in my opinion, could take us towards 37.5 to 40 very quickly. We've looked at in-depth why. We'll do it again. But if we break down outside of it, by the way, this trend line over here, this is the bull market breakout trend line. Because it was in December, we started talking about watch for the bull market breakout and then positioning ourselves as it occurred under 17,000. If this were to break down, you could see this slightly horizontal. It's sloping downward, right? And this trend line here breaking below, let's call it, around 24,000 right now. This time could be different. We have to watch out for it. You could see in the past cycles over here, right? This is almost like an underbelly trend line over here. And then you could see that here's two touches to it. And then it was resistance. And when it broke out, the move was on. You could see over here the bear market of 2018, underbelly line. When it broke, here's a touch into the resistance, right? It broke out. That's that beautiful run we saw into June of 2019. But this was a tightening cycle. But look at the lows tested that. That's beautiful. So here's another one, potentially, though. I'm going to show the difference. So you could see a potential underbelly, right? And you could say that, well, we haven't broken it and we've retested it. True. Yes. But again, you could just take this line over here that this is the underbelly they're looking at right over here. I have cloned and I have it off of here. And then that was support, resistance. It's been resistance. We were never able to hold above. I mean, who's to say that we don't pop up and then come in and test that again? But we're not even above that yet. That's the way that I view that. I think it's too soon, too premature. We are lagging past cycles in certain aspects by how many days since the top and how high we've come, which has only been the 50% retracement as opposed to the 0.786. But since the highest price, roughly today, we're about 60% off the high, which is exactly where we were last cycle and exactly where we were the previous. So in many senses, Bitcoin continues to be right on time. We continue to watch, not trying to time it when it happens. When we get the breakout of the outermost trend line, yes, that's a one-touch trend line, right? At that point, we could see it happening over here. One-touch trend line. Look at that. Breakout, retest. At that point, we will be looking for the bull of all bulls to run. We'll see what happens and when it happens. If lining this up, though, as if April was the all-time cycle high, structurally, some make the case that it was. Price made the all-time high in November, but you could see that the seasonalities could kick in here, November and October and November. Let's see. Let's see what happens. Satan, when the mining hash rate, we were looking at hash rate over here. When the mining hash rate comes off, that capital just goes direct into buying Bitcoin, pushing up the price. No, usually when you see, no, I mean, so usually what happens is when miners are forced to get offline, they also need to sell whatever Bitcoin they were hodling. So let's say that like they're selling X amount of Bitcoin in order to pay their electricity costs, and then like they're trying at the same time to stack and hold, hoping that price appreciates. But you know, likely they're taking on expenses and debt for their operation, and if all of a sudden they have to go offline, usually more often than not, they also need to sell their stack as well. But that type of capitulation, and that is capitulation, that's usually a good opportunity for those that didn't capitulate. And we looked at that on the 1-year hodler ratio. We talked about anytime there's a capitulation on that 1-year hodler rate, that's usually a local bottom. So it's a similar aspect over here as well. Mike, spot ETF may mark the end of the bull market. So you don't think that a spot ETF will be approved to the fourth quarter of 2025? That's interesting. So that's interesting. A lot of people put the probability, I suppose, about around 90%, at least Bloomberg analysts watching the applications, around 90% that it's approved by 2024. So are you taking the latter, the 10% chance that it's not improved to the fourth quarter? I don't know. I actually think, and I was gonna have it prepared. By the way, if you're here and you're hanging out and you're having a good time and you haven't yet hit the like button, go ahead and fire it up and smash the like button. What we'll try to look at next will be some type of predictions for the next bull market, what other people are putting out over there. My imagine, though, that we have the opportunity for a mega cycle. No, for real, a mega bull market if we are seeing a pivot towards outright easing and a return to the printers, right? China, US, central banks worldwide, and that is aligning with a spot ETF already approved for Bitcoin. That is an opportunity here for massive S-curve adoption. And you know what? Diminishing returns is likely coming from the central banks, not Bitcoin. Bitcoin is going to eventually show that S-curves have exponential, not diminishing returns. But we'll wait and we'll watch. If those things line up, if we see central bank policy return to outright easing, and we see a spot ETF open, and we see like the biggest name in the industry out there pushing Bitcoin as hard as can be, like, oh my goodness, we are seeing the largest market in the world, the bond market, devalued in the last 2 years by 60%. It's like we're seeing, we didn't look at gold. Let's take a look really quick before we get into the beautiful stuff here. A little bit of what's going on with CTMX. But let's take a look at what's going on over here. And we're seeing the breakout looking, I mean, the purple line here is the breakout of this downward sloping channel. We are looking at, I don't have it pulled up over here, but this is like a massive, starting over here in 2011, a massive cup and handle, right? And we've had 3 tests knocking on the door of all-time highs. It's breaking out. You got to stay on the right side. It's not like the problem with people who try to get into the macro. And if you notice that, like, like most macro analysts, they talk about things like at the height that they developed, and a lot of time it's like the peak of what's happening. And it's not about like what you think. It's about being on the right side. Ultimately, you can manage risk around it. You have a breakout of a downward sloping channel. You know where you're wrong. You know where you're wrong, but you don't know what continues to happen. And is this because the Fed is done raising rates? Maybe. Is this because of potentially worsening situation worldwide, like war? I mean, it could be. You don't know. That's what it seems to be. But you also are seeing, you know, a massive move. This is gold to US Treasury ratio. And I mean, we talked about that 40-year bull market in bonds. But a lot of people, who's a lot of people, Jordan? Well, China and Russia, they're like not so much investing in US Treasuries. Russia's zero. They're investing in stacking gold, right? And you could see the shift that is occurring over here. And could this break out? Are we getting ready to see gold at this time of cycle move to new all-time highs, and where it goes? And I don't know, but like, it seems more attractive than bonds at this point. Jordan, you're telling me that, you're getting ready to look for a top. I am. I'm watching it, right? We're just looking at, this is gold. This is on the right side of the trade now. And on the 10-year, we just took profits off of that massive move. Not looking to go ahead and short it yet, but now that if we tag this high and the price, I'll be looking for it. Yes. Anyway, Bitcoin is looking remarkably strong today. I can't believe it's holding on to those gains, Michelle. Let's take a look at it. Let's move over and see what's going on. And so we can see the beautiful dance taking place right now. What does that mean? Well, we got long Bitcoin position, right? Up 2%. Out of the market on Ethereum. Ethereum's not looking so strong today, by the way. And Cardano's holding a short trade. So that's a beautiful dance. I mean, just completely hedged in the market. Bitcoin long, as we should be. A lot of people look at the Bitcoin Ethereum ratio or cross. I know that we have a strong solution on it, but that, like, the money's made versus the dollar, right? And that's the way that's the way I look at it over here. It's notable that since the Bitcoin halving, May 2020, Ethereum just made its largest drawdown. Ethereum is drawn down now 17% since that date. This is since 2017, 21% drawdown. And you can see that Ethereum, Bitcoin, all running sideways. Cardano is very close to kissing the sky, but that's usually what happens. Look at all these long periods of moving sideways, new all-time high, but largely moving sideways. It looks and appears that this is just up and to the right. You can see the P&L is up and to the right, but that's not really what happens. Most of the time it is sideways and into drawdown, but the extent of this drawdown is nearing an end. This is the time here to be leaning in. We're getting close to new all-time highs. It's a little different. By the way, we have today scheduled right after this stream, about an hour and a half later, we have CTM Summit meeting, our second one in 2 weeks. I'll let you all know tomorrow what was the beautiful fruits of that meeting. I have to go ahead and say that later today, I will get the CTMX alerts in Discord. Looking at CTMX, you can see it's a lot different. Even though you're running sideways, look at the potential drawdown over here. So on CTMX, the positioning is stronger. Ethereum continues to hold that short. Bitcoin is long, beautiful dance. Cardano holding a short and Solana holding a long. So do you see the uncertainty in the market? It like Bitcoin is holding strong, but Cardano, Ethereum, weak, right? And you could see, it's like more of a sweet spot when all are attacking to the long side. So the momentum could go either way from where we are. And right now, Bitcoin continues to hold and hold well. And I hope it continues to hold, but we were rejected towards the top end of the resistance. We're going to need to reclaim this if we're going to see any further extension over here. If that's happening, it's going to bring the rest of the markets with it. So a lot of things. Let's start over here. So those in CTM, if you log into the dashboard, you will notice now you have CTMX templates, right? This is CTM 2.0 templates, whether you're looking at Bitcoin buy side only, Bitcoin, Ethereum, Cardano, buy and sell side. The daily, same thing, buy side only, buy and sell side. Ethereum, Bitcoin. I was talking about our solutions on Ethereum and Bitcoin, and let me just briefly. I don't see the point or purpose, in so much as that. I mean, our returns versus drawdown are quite extraordinary. Except, and like you could say, oh well, okay, well, we know when to be short and ride these trends, but versus the dollar returns simply dwarf them, right? Like here's Ethereum over here. And I mean, I get that since a long time, that's since 2017. Let's not look since 2017. What about since the halving, the Bitcoin halving? I mean, okay. So like, yeah, I prefer the dollar versus Ethereum Bitcoin, even though I have the Ethereum Bitcoin solutions, that we have the Ethereum Bitcoin solutions. I don't understand. The dollar is where it's at. There's no question about that. Stocks, 1 hour, daily, and now you have CTMX. CTMX now a couple of months in development. Javier dropping from CTM Core, Javier dropping from CTM Core, Hive Mind, Collective Collaboration, joining us strongly on both the coding dev team and the summit team, working with Javin, producing even potentially further advanced design. I mean, really exciting stuff. I was very skeptical in the beginning. I continue to be excited about the potential of CTMX, but the added variables, I stay cautious and want to see a positive forward testing for a period of time before I become a true believer. And that remains true and to be seen. However, now that these are for you to forward test, and as we're forward testing them, to do your own due diligence, to go ahead and take the scripts and back test every single, like if you're focused on Bitcoin, like, okay, what has Bitcoin done since 2023, right? This year. And you could say, all right, so 37% return, 10% drawdown. By the way, since 2016 on Bitcoin, the drawdown 10%, is that something you potentially feel comfortable with? What happens going back to 2011, the inception? Drawdown of 24%. So I've been forward testing this enough now. And look, not until that volatility returns and we start seeing in 2023 what has been a contraction in volatility, right? How did this perform? This is what you have to do. You have to be comfortable with the system you're trading. Go back and look at 2023, right? How did it perform during a bear market? That's pretty good, right? What about during a bull market, 2021, right? All right. 2020, I mean, 185% return, 10% drawdown, right? You have to do this and know and understand how it's reacting in all these situations, and also have a very clear understanding that no, it's not up and to the right. Well, it is up and to the right, but most of the time you're going through long periods of drawdown, months. This is months of drawdown before crushing those new all-time highs, This is 2020 before the halving. You had lots of sideways price action to draw through, and that's what you want to become familiar with. I myself, with the experience and knowledge I have, I feel comfortable now to put a significant amount of capital behind CTMX, more than I have behind CTM 2.0. I'm taking the capital I have behind CTM 2.0, which is, and I'm putting a larger proportion of that capital now behind CTMX. Now I am only trading Bitcoin and Ethereum. And you could say, well, I want to trade Cardano. Well, if you feel comfortable and you've discerned, and you're like in 2023, Cardano is crushing it, right? And likely that continues, in my opinion. Like, when the bull of all bull returns, I do believe, right? And the bull of all bull runs, in my opinion, when, again, we talked about like a spot ETF, could that do it alone in a tightening cycle? Well, we saw a glimpse of what was happening, and we saw a favorable market reaction if that was real. And then you start seeing Larry, he's talking to Chad, and he's like, Chad, I want you to call up everybody on your list and tell them that we're recommending a 30% allocation to Bitcoin. Well, then, it doesn't matter, tightening cycle or not. You have to follow the flow of funds. If Bitcoin begins to move, regardless, tightening, easing cycle, what's happening, is going to take the whole space with it. And I know Bitcoiners don't want to talk about it, but the next thing that you will see happening is Ethereum, spot ETF applications, boom, 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 lining up. Solana, boom, 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 lining up. That's what I see happening in the space. So I continue to be excited. There's no question about that. And I continue to be cautious. But at this particular point in time, I feel comfortable with putting my capital behind it. That's what I'm doing. I don't suggest that you do that. I don't suggest anything. I suggest that you take the time to understand. And you need to also, by the way, super, super important, you need to also go back and see, for example, I'll just pull up Ethereum, right? And you need to see like all these like tight movements here. What is the expected drawdown during all of those different periods? You could go to the list of trades. I suggest you go to the list of trades and you go down and you see like how often you have a string of losses, how long the expectation is that they're going to last. Here you go. This is in 2021, the summer of 2021. Bam, 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 bam. Go to performance summary, right? Check out, look, the average winning trade. This is unreal. I can't look back this far. Hold on one second. Let me just go to 2008, 2020, 2021. I'm trying. All right. How about this? 2022. I think the price action since 2022 has been as far from favorable as possible. Let's take a look at what the average winning and the average loss is. So the average winning trade is 13.8%, and the average loss is 2%. That is roughly somewhere around a 6.25% win to loss ratio. So every trade you take, the probability, the potential here, and that you have less than a 50% win rate. So every trade you take, you're expecting that your average win to loss is 6 times greater. That doesn't mean that every trade you win that you take is going to be a 6-to-1. That means that's what your probability is. That's the way you need to look at it. That's what you need to do. So his father's some other Jeff. Beautiful to see you. We got to get everyone ready here because we are getting closer, and we're all getting closer to the bull of all bulls, getting on a run. Have a beautiful day. Amazing, amazing. One of the most beautiful things for me was when Javier, and CTMX stands for experimental, and CTMX is built on top of CTM 2.0, and it is the hive mind collective contribution, right? That continues to stack and build, but major contribution by Javier. And what I think he was so happy to see, like when he drops it over the next several weeks, to see the CTM collective collaboration, hive mind buzzing, and to be able to continue to produce these phenomenal solutions. I mean, if it doesn't bring a smile to your face, then you're missing the fun in all of this. And it is absolutely it's beautiful. CTMX it's highly proprietary. How is it different? It has added a volatility filter. We'll call it the Javier, a volatility filter on top of CTMX. So it is different in adding a couple of different variables. That type of, let's say, creativity engineering continues. Javin working closely with Javier right now on more of, let's say, a dynamic zero line to add into all of that. That might, I mean, it doesn't stop. It's beautiful, but as far as how is it different, I mean, we could just say that it's adding a volatility filter to on top of CTM 2.0. So Hypernova, I mean, if you direct message me, we could sort everything out right now. Anyone that is on CTM buy side only has access to Bitcoin on the 8-hour, buy side only. You have access to buy side only on Bitcoin and Ethereum. I was not able, we have solutions for buy side only on Cardano and Solana. I was not able to yet produce the scripts for them, and I I just couldn't do it. So I will continue to dig into the code and try to figure it out. So, but right now we have Bitcoin and Ethereum for buy side only. If you're trading the buy and sell side, you have Bitcoin, Ethereum, Cardano, Solana, and everyone has access here to Tesla CTMX on the 1-hour. So I hope that answers your question, Hypernova. I don't like, I wasn't able to do it for Cardano and Solana, and I don't, when I'm able to, we will get the buy side onlys out for them, but I'm not able to do it yet. So we'll continue there. Yeah, God bless you all. So have a beautiful day, everyone. Thanks for being here. Thanks for participating. I hope you have a beautiful day. God bless you. And I'll see you. We're going to talk next about some bull market predictions, and we're going to take a deep look at them and see what we think. So that's going to be a fun session to put together for everyone. Right now, I'm going to prepare for our summit meeting and continue this enormous creative phase. David, hey, you has an incredibly exciting tool to share with the summit team. In help coming off of 2 weeks ago, we had a summit meeting, and it was brought up how you could use arrays potentially within PineScript to look for potential further preferred settings. David spent a massive amount of time those couple of weeks. We're going to take a look at what he's done and continue forward. Have a beautiful day, everyone. God bless you, and I'll see you all soon.